All right, guys, real quick, I want to talk about why I cut my trade early and when to cut a trade early. Okay, so this is my trade from Sunday night Asian session. I did a recap on my channel. If you would like to see that recap, you can go check that out. But I will do sort of a recap here. So, this is what the trade looked like. I entered into my first position here. I bought one at 25.49. I bought one at 25.49. I'm sorry, I gotta get my calculator ready so I can get you the average because I don't think I made note of that. But I bought one at 25.49. So when the markets opened, we gapped up. I was waiting on a pullback. Obviously, I missed. I didn't catch this opportunity. This is where I really was interested in. I was interested here, but this is where I really was interested in getting into trade. I missed that, and so mess my hold on, to mess my charts up, guys. Okay, well, I don't know how this got over here. Right here. It's locked. Why is it over there? 1 second, because I wrote it down. Man, good thing I wrote it down, huh? So, yeah, I bought one at 25.49. And I bought four at 24.6475. But which candle that was? It's now a mystery because, well, if I bought here, oh, it was on this candle. Okay, sorry, it was on this white candle here. This white hammer. That's why I have this box here. Trading view. When a day resets, they erase they get rid of the arrows, your execution arrows for that trading day. So I had to document this before I did the video yesterday because I knew I would lose it. So I entered into the trade here first, and then secondly on this candle here, I entered for more. So now I'm in the trade, and I have five contracts in the trade. So I'm thinking that the reason why I entered there is because of this breakout. Also, I'm thinking that if I enter anywhere like above here or here, I'm kind of even more late to the trade than I would like to be, right? And so as I'm into the trade is playing out. We go negative here. Um, we go negative here, and we exit the trade. Where do we exit? We exit at 25.38. So we broke this zone, and we exited on this white candle here. We exited on this white candle here. So this video, I want to talk about why I exited early. And the reason why I exited early is because sometimes you have to think about think about the factors of the trade, right? Number one, the first factor is that I already entered into the trade late. So even though the trade panned out and it would have hit my full TP somewhere around 2:24 in the morning or something like that, um, luck would have definitely came in here because this here is the previous resistance zone. So if I move my stop before I went to bed or before I left, if I move my stop and just let the trade manage itself when I left, then it would have come down to luck, right? Like luck being, was I lucky enough to move my stop somewhere in the zone to where this white candle right here did not come and stop me out? So that's the first thing that you have to think about, right? Is, am I going to get the correct level, the correct stop out level? If I move my stop up, am I gonna, have it low enough to where if price does pull back, it doesn't respect it, respects my level and goes higher to finish out my trade. Not only that, you want to know, not only that, you want to know, um, like how far are you moving your stop in relation to where you are? So I'm thinking this on this green candle, on this green candle. I'm already more than 50% into my trade. I'm about 80, 90, 85, somewhere around there percent of my trade, right? Yeah, around 80% of my trade. I'm risking 350 to make 1,000. I'm up $800. So now the question becomes, And obviously hindsight is 2020. You can actually see and do the math afterwards, but from the high of the candle that I got out to the top of my take profit was 13 and a half points. I'm trading 5 micros, so that's $135. So the question becomes, so that's $135, and from where we were at the time when I'm thinking about it, down to where we potentially could have gotten stopped out at, or would have moved our stop to, it is about 37. It's about 37 points, or 148 ticks. So if it's 37 points, which is $370, the question is, you have to put everything together. If I'm in a trade and I'm up 80% in my trade, do I want to risk like $370 of that 800 just to make $135, right? And some people might say yes, especially since hindsight is 2020. You might say, yes, I want to risk that. But remember, none of this forward action has happened. You have to think about it when that forward action has not happened, and you have to understand that wherever you move your stop has to be the exact spot that you won't get stopped out at, right? So knowing that you might not get lucky and you might get stopped out, or would you rather take $800, or would you rather take 300, or 800 minus 370, right? So, or would you rather take $430? That becomes the question. And so for me, I said I would rather take the 800, because when it pulls back, if it pulls back here because of these moves, this is a deeper pullback than I would like. Being where I was in a trade, I would have liked to see it maybe pull back 100 or 200, something like this. Come back, pull back here, just a couple points, and then bounce and go hit my TP. Bounce and then go hit my TP. All right. That, along with the fact that I was already late to the trade and I missed my ideal entry, right? If I made my ideal entry, obviously, that would have been somewhere in here, and our full TP would have been hit. But since I missed my ideal entry, I'm sort of late to the trade, and I'm 80% in the trade, and the pullback that it needs to come to find support is more than what it needs to get to take profit. I need to analyze all those factors and ask myself, do I want to cut this trade or not? And so sometimes that happens, and I'm doing this video because sometimes people ask themselves, or they ask the question a lot, and I know I did too in my first and second years of trading. It was, when do I take profit? How do I know when to take profit? Well, if your risk is defined and you're honest about your entries, and you've been watching your asset you're trading so long, you know how it behaves, right? Some people might use the average true range indicators, right? The ATR, understanding how much of a move the asset gives you. This is overnight. Not only that, overnight we know liquidity usually comes in sometime around 8 o'clock in the market. So when we were pulling back and around 8 o'clock we started to bounce and we found a higher low there, I knew that, okay, this trade was probably going to work out. We had a chance for buyers to come in, right? Obviously liquidity came in here and here, but at 8 o'clock we're looking, sometimes these candles are smaller and we're looking for that move. 6 o'clock market opens, obviously it does its thing. It just depends. But yesterday, or Sunday night, that was one of the things that I had in mind. So you have to be keeping these things in mind, right? How much of a move is this trade going to give you? What time is it, right? Where are you in relation to the trade? And also, it was around 9 o'clock. So I know the markets usually die down around this time, and they pick back up in the mornings when I'm asleep. And so as we can see, 9 o'clock, you see what it did? It pulled back, it bounced, just went like a tick or two higher than my previous candle where I exited. And then it just kind of, you see the candles got smaller, kind of just trended sideways. And then it looks like at 1:36 volatility picked up in the market again, and then at 3 a.m. in the London session. So these are some of the things you need to keep in mind. This is an info bar, info line tool that I use on TradingView. It is here under lines. You can see it there, info line. You can go ahead and start if you want. I did do a video for beginners that are watching this on how to use TradingView, what I use. That is one of the things I use sometimes. It's helpful when trying to measure moves and stuff, because it'll give you the ticks and the points. It'll give you the trend angle. You know, anything above 45% or 45%. You want to be careful. You know, that trend, the quicker things go up like that, the quicker they come down. So just little things like that to keep in mind. But overall, I just wanted to touch on that trade. You know, the importance of understanding when to cut it, when not to cut it. You don't need to cut it early if you got a good enough entry, if you believe in your entry. And what I mean by good enough, I just mean getting into the trade early enough, right? Like down here, when you first see the move happening and you think it's going to happen, you don't want to wait until it happens. I was a little late. Like I said, I was actually fixing something to eat. But you want to get in to the trade as soon as you think it's going to pan out. And then, start small. And then you can add to the position if that's what you want to do. If it starts to go in your favor, which is what I did today. And you'll see that on the recap trade for today. But so that's going to sum this video up pretty much. Just keep in mind where you entered into the trade. How big of a move were you expecting out of the trade? Obviously, this trade, it gave me $1,000 within here. So what I'm looking for after it pulls back is, will it give me another $1,000? Maybe yes, maybe no. But unless we got a nice big trend day, obviously after that, anything after that, to go long here would just not make sense, right? Because we've already had the moves happen. So trying to get in on the moves as early as you can, defining your risk and your take profits, what you want to make, what you're willing to risk. That helps save the account, and it helps to define your trades a little more. Keep in mind the time, and keep in mind again your entries. Keep in mind where you are in relation to the trade. If you want to cut it early, if you're 50%, you may not mind risking it pulling back to break even, or if you're anywhere under 50%, or if you're 50%, you might not want to risk it pulling back to break even. It all depends on you as a trader, what you're risking, how many contracts you're trading, right, what your position size is, and things like that. But using this tool and defining your risk does help you when you look back at your trades. It does help you recognize, whether your entries were early or late, if you have, and how many times the trade would have actually given you a time to enter, right? So like within this trade, I entered there where this middle line is, the line between the green and the red box. That's where I entered at. And so as you can see, that was here at this entry. And as you can see, and actually my first entry was on this candle. My first entry was this candle here. And so as you can see, just with a little bit of patience, right? The trade, instead of going up in profit and coming down and bring me negative, it actually gave me 1, 2, 3, 4 chances, 4 opportunities to enter back into the market long. Now, had I did that and entered in on, this level of support, that down here, these levels of support, seeing those wicks come in, had I entered in there 5 contracts and let the trade pan out, then obviously my full TP would have been hit. So that's okay. Trades are not always perfect. We try to make them as perfect as we can, but they're not. So when they're not, those are just some nuances and some things to keep in mind while you are trading. So that's it for this one. Time is 10:51 a.m. It is May 13th. Markets are still open. I just got off my live stream. I'm about to go work, and so I will see you in the next one.